Michael Carnevale is branch manager and financial advisor. Securities offered through Raymond James Financial Services Incorporated, 400 Southbridge Street in Auburn, Massachusetts, 1-800-657-9126. A member of FINRA SIPC and are not deposits, not insured by FDIC or any governmental agency, not guaranteed by Webster 5 Cent Savings Bank, and subject to risk, may lose value. Webster 5 Cent Savings Bank is not affiliated with Raymond James Financial Services Incorporated. The information contained in this report does not purport to be a complete description of the securities markets or developments referred to in the material. The information has been obtained from sources considered to be reliable, but we do not guarantee that the foregoing material is accurate or complete. Any information is not a complete summary or statement of all available data necessary for making an investment decision and does not constitute a recommendation. Any opinions are those of Michael Carnevale and not necessarily those of RJFS or Raymond James. Expressions of opinion are as of this date and are subject to change without notice.
Good afternoon, ladies and gentlemen. This is Richard Morchoe, and we're at Conversations with, once again, Mike Carnevale, who is going to tell us, as the metaphor of Wayne Gretzky, we're going to look for where the puck's going to be, not where it is. So where is the economy going, Mike? What we see here, well, are you doing a victory dance over that 1.9%?
I am.
You
I am. Everything is couldn't be better.
Even all those banks having problems.
All took care of themselves.
What?
It took care of itself.
Okay. Everything is hunky-dory.
You know, it's interesting. I mean, month of March, historically, middle of the road type of month for performance. Up 2%. Forget about what all the complaining people are doing. 2023, Dow's up, S&P is up 7 point something percent, NASDAQ's up 15. I'll take that every single year.
And you don't see any underlying problems?
Well, I think there's always underlying problems that can happen, but, too often people get paralyzed with what could happen. Yeah, maybe it does happen, but what, I always look at the other side. What if it doesn't? There have been people who have been sitting on sidelines for months because, they read an article 11 months ago that a recession was coming.
Well,
okay, it may come, but what do you I say, what do you do if it doesn't?
I've heard this statement that you shouldn't worry too much because the world doesn't always end.
Correct.
But occasionally it does. I mean,
yeah,
we would say a 1929 recurrence type thing would be big.
Yep.
Would we say 2008 was big?
Sure.
How bad did that get? But it came back.
Came back more. Matter of fact, March is the anniversary of the start of the greatest bull market ever, which was March of '09. At the bottom of that financial crisis, the Dow was 6,500. It's 33,000 today. I got to tell you, I know people who got out in March of '09. They've never gotten back in. And you know what they say? Oh, geez, these banks, they pay us 0.5%. They're not giving us any.
Well, that's why you say
5 or 6 times.
That's why you would say, but I've heard on the radio people saying, well, look what the Dow is now. It's gone up,
right?
But it's only gone up in inflationary terms.
That's
but
okay.
What you're doing is just trying to stay even with it.
That's better than the alternative,
falling back, which is right.
Which is,
but
having you down 50% in your purchasing power.
You're watching. It seems like you're watching magic in this because it does not feel real in a sense. that a system based on eternal 2% inflation, which it never gets to, it almost never gets to,
Right.
is basically, you know what Zeno's paradox is in mathematics.
Yeah.
Okay, if you keep going down, you never reach, according to you, the arrow never gets
Right.
there. Well, this is like that, except we don't expect it to get there
Right.
until it might just be so worthless it gets to zero.
Okay. So then the alternative is
Right now, there's no other.
you don't do anything, and you're stuck back
I
15
get
years
that.
ago.
I get that.
Yeah,
I
I mean,
understand that. So my question then, and I've posed this is, can this eternally going to zero, and maybe not getting that there, just halving again and halving again like Zeno's arrow does, but never getting there, how can that not eventually be, how can the dollar be so thin that it's not a disaster? And we don't have to do this. We can do a whole series on
Yeah.
this.
Again, I just wouldn't be betting on that.
That it goes, well, it is going to go, it may not go to zero.
Right.
But it is, the evidence is that you can say, I'm not betting on it being a disaster.
Right.
But the progression lower
Right.
is eternal.
Right. Yeah, but I'm not. I would not be betting on a disaster.
Okay. And that's fair enough. I mean,
I just-
there's been some uncomfortable times,
Oh, sure.
but Mike has been right. There has not been the existential disaster.
You know, I mean, you look at the charts. I don't care how far back you want to go. 1901. Market always has made new highs. It's never made new lows. So if
Well,
you
it can't. If zero is where you started.
Oh no! I mean, you know, it could go. I mean, you know, the low in was in 73 or 70, 73 was 600 and something.
Yeah, and that low, the lows are also an expression of inflation.
Oh yeah, sure, yeah. But I mean, betting on that, you know, it's funny. It's so easy to do well in the market, yet very few people do well. Why? They're trying to time things. They're trying to outsmart things. They say, today they don't like Biden. 3 years ago they didn't like Trump. 4 years before that they didn't like Obama. And they're always trying to.
Did everybody not like anybody?
Well, 50% of the people
50%.
didn't like.
Yeah, but 50% vote like one guy.
Right.
Then, you know, so it's they feed off each other.
Right, right. And, you know, simple math.
Which is about all I can get to. I mean,
That's all I can do. You know, if you got out of college at 22 and made $40,000 a year and never got a pay raise and participated in your company's 401k at 15% when you were 65 and put it in an index, whatever, balanced growth, whatever index, at 65, you'd be a millionaire.
I read a guy said what you should do when your kids are born. Immediately put the money. I think he might have said it. I don't know if that's legal. A Roth IRA.
Yep.
If you got it to Roth IRA
Yep.
when the kid is 1 day old,
Yep.
and he doesn't do any, or she doesn't
You
do
don't have to do
anything.
anything else.
Yeah, he made the point that is the way to wealth.
And you know, when you say that,
But is it if it's really the expression of the inflation?
yeah.
I mean,
Well, but see, that's what that's what I find the people who don't do that say. Okay, so what's the alternative? You're at 65 and you've saved $57,000. That's your alternative.
Yeah.
So, you know, it's sort of like you don't need anything miraculous to happen. You just need to say, hey, look, this is what I'm going to do. And you hit 65, you've got $1 million. Forget about, well, yeah, but that $1 million isn't worth anything because of inflation. Okay, I'll give you that. What do you have?
Well, right now, $1 million is worth a lot.
It is, yes. Yeah.
Now, if it had been, say, like, okay, say we're saying it's $10,000 in $1955.
Right.
Well, you could buy probably a heck of a lot with $10,000 in 1955.
Correct.
Correct. My parents bought a house.
Yep.
With just a little more than $10,000 in a house that's today probably worth between 500. Well, could go for 500 to $1 million.
Yeah.
So this is a discussion which one of us will get a doctoral thesis out of. Well, probably neither of us. We got better things to do.
Yes, but I mean, it's like, so all this stuff and all what you hear by experts, you know, you're keeping them employed, but you don't really need all of that.
Probably not.
But what you do need is you gotta save yourself from yourself, really. You know, I don't like this. I don't. You know, I would. You know, I'll get back in when. Okay. Yep.
Well, I think we can. This is something that happens automatically, and it really is until the whole thing goes belly up. It's no choice.
Yep.
We have for those of you who think you're going to game the market, let me.
You're not going to.
Well, let me repeat the words of the famous American philosopher Yogi Berra. Predictions are difficult, especially about the future. So we'll move on from that.
Yeah.
All right, so back over 33.
Back over 33 again.
Ranked fifth of the 12 months.
Yeah.
Greatest bull market began in 2009, going back in history at $6,500. Wow.
Yeah.
Last odd year loss was 2009.
Yeah.
So we are, just everybody take Rob Banks and get it over to Mike.
Yeah. Well, and interest rates fell.
Yeah.
Wait a minute. I thought the Fed was raising rates. They are, but interest rates fell.
That is kind of we need a whole show to discuss that.
Yeah.
All right. Technical short-term sentiment weekend, 200-day New York Stock Exchange moving average. Now 54% versus 60 a month ago.
Yep.
Average risk.
Mm-hmm.
Okay, so volatility index 19.
It's pretty low.
Pretty low, which a good sign.
That's a bad sign.
Bad sign. Because people are
They're
not fearful.
Fearful.
Okay. Measures expectations for the stock market. S&P 500 index options. What does that say?
That's telling us that people aren't too afraid of the market. And when are people generally not afraid? When they see the market going up, they're happy. What happened in the month of March? Well, the market went up. So this is telling you that anything under 20 on that index is like a warning sign. That there's a lot of complacency going on.
Okay.
These are the times when you see people saying, "Oh yeah, I quit my job because I'm trading stocks now. I made more money trading stocks than I." That's when you see these numbers this low. Complacency.
Not me. I answered all those lottery ads.
Okay. Placed all your bets.
Oh yeah, and that's coming right away. Sure thing. All right. Stochastic oscillator.
Yep.
Who doesn't like a stochastic?
That's one of the great indicators, because that kind of tells you where stocks are relative to where they've been, where maybe the bottom would be the support, and if they move up, how high do you think they can go? Would be a resistance. Big range there. The fair value is between 20 and 80, and it's at 35. So you can see it's on the lower side. That's a good sign. Greed index, a little better than it was a month ago, but still neutral. So although the market's done real well, some of those technical indicators have weakened quite a bit, especially the volatility index. So you say, well, does that mean the market's shaped up to go down? We have a caller.
Yeah, I know. I can't take this, obviously. Okay. This happens in real TV, folks. It doesn't happen in fake TV. This is real life. Okay.
Okay. So does that mean, oh, wait a minute, the market's going to go down? You got to look at the big picture. Yeah, if it was any month but April. Why? Because historically, April is the best month for stocks. So
if April turns out to be a disaster, are we all committing suicide?
No, because we would say there was an indicator that things were weakening. However, it's really strong, the fact that April is the best month of the year. So maybe worry in May, but not right now.
Tune in next month for the next phone call. All right. Major news, monetary policy testimony, Mr. Powell, Chairman Powell.
Right. Twice a year he has to go before Congress, and that's only something relatively new. It was passed in an act in 1978. Prior to that, the Federal Reserve really didn't talk to Congress a lot. And there was a bill, Humphrey Hawkins' bill, Hawkins, I believe, was from California, and Humphrey was a senator from Minnesota. They sponsored a bill that said, hey, from now on, the head of the Fed has to come and talk to the House Financial Services Committee and the Senate Urban Affairs and Banking Committee twice a year and tell us what they're doing, and we're gonna ask them, we're gonna grill them. So that's been going on now for almost 50 years.
So he says higher. Fed, UK, ECB, Norway, and Switzerland.
Rates are going to have to be go higher.
Canada, no change.
Nope.
All right. The economy itself, inflation, mixed news.
Yep, coming down. The rate of increase is not as fast as it has been.
Inflation is not coming down.
Well, the rate of increase
is,
right.
I have to always say that.
Yes. Yeah. But that's a good sign, the fact that the rate of increase is dropping. Leading economic indicators, that's one of those that people want to hang on and say, oh, well, you said a recession's odds increase after 3 negative months. Well, the last month was the 11th. Yeah, but maybe that indicator's not working currently. Why? Who knows? Or maybe it's not, doctor prescribes a pill for you. This is a wonder. Yeah, doc, it's not working for me. Yeah, we don't know why it's not working, right? But we'll try something else. So you can't, people want to hang their hat on like one thing. Aha. Well, if that was the case, you'd have gotten out 8 months ago, because after 3 months, the odds of a recession increase. So, that is a major indicator that you want to keep watching, but maybe not as important right now as historically it's been. It may be important again at some point, but not right now.
Okay.
Jobless claims, that's kind of miraculous that, with the higher interest rates and the high inflation, all these other things that are going around in the world, that it's not higher. The number you want to kind of focus on is 250,000 layoffs a week, because usually that's when, at least based on historical data, that's when it starts to hurt the economy. The latest number was 191,000. So, bad for the 191,000 people, but for everybody else,
Well, you don't know what their jobs were.
that's true. For everybody else, not that bad. The other one we like to look at is the employment report, because the jobless claims only shows one picture. It shows people losing their job. But what's happening to other people? Are they finding jobs? Yep. In February, which is the latest report, 311,000 new non-farm jobs were created. Well, what does that mean? Well, history shows that the economy needs 150,000 a month to keep things going forward. You had double that. And that's even lower from what we saw in January. So that's, again, another good sign, right?
Well, we don't know the quality of the jobs.
Well,
I
they're
mean,
all low quality,
yeah.
by and large.
So they're the bottom level of people,
Yep.
probably at some level of desperation for a farm, for a job.
But that's okay, right? I mean, some wage is better than zero
Well,
wage.
I understand not all of us can be cable TV personalities or computer programmers.
That receive phone calls out of the blue, right?
It was my
But-
it was my broker.
Oh. What do you tell you to do, sell? I got to know, because then I'll do the opposite.
He told me to buy.
Oh boy. I got to get in there early tomorrow morning.
So
But no.
if you were looking to buy some stock, Mike will be down there tomorrow morning waiting to help you.
Bright and early.
Yeah, he's dumping it all.
Yes. I'll be able to sell you some. But no, I mean, so, again, it's, everybody's looking for the perfect situation. Doesn't exist. It's sort of like, okay, 300,000, you need 150. So the other side says, but they're low-paying jobs. Yeah, by and large they are. But low-paying is better than no-paying.
Well, we've heard about the great resignation. What are they
Right.
calling it?
Yeah, that's what it is. Yeah.
The great that people have been quitting their
They
jobs
have.
and not necessarily taking up jobs.
Correct.
Well, explain that phenomenon so that people will have some confidence when they call you to buy stock tomorrow.
Well, I think,
That
there's...
you're buying because you're selling.
I'm
buying.
selling, yes.
Yeah, I'm buying.
Yeah, I'll have enough to sell tomorrow.
Okay, all right.
The
So,
store will be full.
Explain the great resignation in relation to the employment report.
Well, I think there's, I think that was the case. But then you want to look at something that says maybe we're past that. And that's what's happening with the size of the labor force. More and more people are coming back into the labor force. For instance, in February, the size of the labor force grew by 419,000. That's 419,000 people who in January weren't looking for work. So I think it's starting to,
Well, I know of some places.
get better.
I do know some places that I know the people, and I know they're looking for workers.
Yep.
And they're not higher math jobs or
Right.
anything, but they're not horrible. Well, they're not wonderful, but they're not absolutely horrible either.
Right.
And they can't find people for them.
Right.
So,
Yeah.
where are we in that on that treadmill? I don't know.
I don't know. I mean, more and more people are going back into the labor market. It just might be not in a particular area. I mean, according to the numbers, there were 419,000 more people looking than were looking in January. That doesn't mean there weren't people still leaving the labor market too, but the net was an increase.
Okay. Well, time, like anything, time tells everything sooner or later.
Yeah.
And but you're definitely saying, okay, we had those indicators that said you're in a recession. We had them, and you said, nope, not a recession.
Well, you'd want to see sort of like other indicators confirming this. Higher jobless claims, higher layoffs, no new job creation, inflation that is increasing as opposed to the pace decreasing. You need something, it's one indicator alone isn't enough, right? It's like, it's like anything. Oh, geez, you got a headache. Okay, well, that could mean anything, or it could mean nothing. So we need to see, okay, is there anything else that confirms the concern that the leading economics indicators have? And there's really been nothing.
Well, there's an indicator you don't have here, like job formation. I mean, are there jobs coming on the line, better jobs than the 311 there?
More jobs or
yeah,
better paying?
But any kind, better jobs coming. What kind of jobs are coming? Are in the pipeline?
They're mostly service related.
Do you know if they're more coming though? I mean,
Well, you won't know until the next report, right?
Well, usually they have some kind of statistic.
Yeah, there's some indicator that projections that stronger than expected. And what's that? That's 150,000 or more.
I would love to see statistics that went through all the job, like the programmer, the waiter.
Oh,
I'd like to see every one of those.
That's all in the jobs report. When the government, when it's the Bureau of Labor Statistics, when they put out that monthly report, it's like 50 pages.
Yeah, okay, that I really want to go through.
It can tell you, for instance, okay, educational background, who's getting the jobs, who's losing the jobs, age, who's getting the jobs, who's losing the jobs, skilled versus non-skilled.
Yeah, I want to know the ones that they're out. We want you. That's the level I want to know.
Right.
And I don't know if you got that.
That's all in there.
That's all in there.
That's all in there. Generally speaking, it was interesting that in the February report, the more education you had, the fewer jobs you got. Usually, obviously, it's the opposite. So that led you to believe that, well, most of the jobs were in the lower paying end. That would require a high school diploma or something less. It's usually less than high school diploma, some college, associate degree, bachelor degree, and then an advanced degree. That's how you should break it down.
And
the more in February, the more education you had, excuse me, the tougher you had finding work. So that would lead you to believe that they tended to be lower paying jobs.
I've been getting less calls for the genius level work lately.
Yeah,
I know what that's.
I'm out there, but I've never been hired at the genius level.
Yeah. Well, they were calling more and more before up until now.
Right. Yeah.
Anyway, I would think it's an important thing for the society to provide those, to give us those jobs.
Yep.
And you're saying it wasn't that good.
It wasn't there in February. Okay. Usually it is there. In other words, usually you don't even have to, if you look at the report every month, you don't even have somebody even look at those charts because well, the higher education did better than the people who had the less education. That wasn't the case in February.
Well, we're going to have to ask you to come back with better figures on the genius level.
The genius
next
level.
month.
Okay.
And
we'll be able to do that.
And we look forward to seeing you as we've reached the end of the rope, end of the line today.
Sounds good.
Thank you very much, Mike. It's Richard Morchoe saying good afternoon from Conversations with.